Hey, everybody. Welcome back to another State of the Market. I'll be your host, Scott Zaino, the Scott Zaino Group, and Keller Williams Luxury Real Estate. First and foremost, I hope everybody had a fantastic July 4th, spending time with family and friends and barbecues and burgers and dogs and all that good stuff. I know we did, and we had a great time, and everybody is still good and safe, right? We had some amazing weather, which is always a blessing for all the folks that come to the Cape to enjoy their July 4th. Having great weather makes a big difference for boating and fishing and barbecues and things like that. So I'm hoping that everybody had a great time. So July 5th. So we're going to just do a state of the market for the month of June. All right. So lots of things happening out there. Lots of people talking about the economy, and lots of people talking about interest rates and housing. So we're hoping we can answer some of your questions today and get through some of that real estate stuff that everyone's talking about at get-togethers and parties and things like that. So let's jump right into it. I'm going to go ahead and just share my screen here with the four quadrants that we always talk about first, right? Days on market, active listings, percentage of sales price, percentage of sales price, list to sales price ratio, and months of supply. So let's get right into that and get into our screen share. All right, so the median sales price, as you can see, for the month of June was $649,500. Okay, Scott, how does that stack up against some of the other months? Well, you can see right here in May, it was $660. So it dropped about $10,000. The median sales price for the month of June here on the state of the market here for Barnstable County, that's from Plymouth to P-Town is where our MLS is located. Okay, you can see back here, we like to go back 3 months, 585 in March. April, it was 660. May was 656, and June 649. Okay. So the next quadrant that we want to talk about is homes for sale. So this is 611 for the end of June. May was 544, April 457, and March of 424. So all this positive upswing here is inventory that we so desperately need here on the Cape. So we're at 611 units. Okay, so inventory has been progressing since February. It's been getting a little stronger each month, and we're now at a total of 611. Now, typically, this is pre-pandemic. Look at that. January 2020, we're at 1,700 units. Typically, we carry, 2,500 units. There's some years that we had 5,000 units, and there was some years it was 10,000 units. So when you're way over here at 611, coming out of the norm, which was 2,500, we still have over 2,000 units to make up, and that's going to take some time. That's not going to happen overnight, because for every 10 units that come on the market, 12 go pending. Right, so you're always a little bit behind the 8 ball here, but lately it seems to be that the amount of active listings has climbed up nicely to 611. The next one that we want to look at is days of market. So we're still sitting at 7 days, which is an unbelievable time frame to get your property sold in 7 days. So that's in June. So May really wasn't I mean, we went up a day. We went from 6 to 7, right? 6 to 7. We've been hovering 6 in April. March was 7 and 12 in February. So it really hasn't changed all that much from 12 to 6 to 7. Here we are at the end of June. Days on market, 7 days to sell your house. Now, Scott, is my house going to sell in 7 days if I put it on the market? It should, on an average, if it has the 3 Ps, right? We always talk about the 3 Ps: price, presentation, and promotion. So it's so imperative today to price your house properly to attract the buyers, okay? So that your house can sell in 7 days. Some of them are taking a month or two. Some of them are selling over the weekend still, right? If you get a house for $599 and it's in excellent shape, it's priced right, it's presented right, it's exposed to the world properly through the internet and all your marketing and branding, then yeah, you should sell that house over the weekend. So we're averaging 7 days on market, up 1 day from 6. So the next quarter we want to talk about is month supply. So month supply, we're sitting at 1.6 months. So what this tells us is how many months of supply we have before we run out of inventory, assuming no other properties came on the market for sale. Now, we've talked about this before, right? Anything less than 4 months is a seller's market. So 1.6, seller's market. When you're around 4 to 5, maybe even 6 months, it's kind of a neutral market. And then anything over 6 months of inventory, it's a buyer's market, flips. So let's take a look and see just real quick. When was the last time we had more than, say, 5 or 6 months of inventory when it was a buyer's market? Because today it's certainly still a seller's market at 1.6. So if I just change my graph here, you can see the last time it was a real buyer's market was probably, let's see, I would say right about here, October of 2019, it was a buyer's market. Then, of course, inventory started dropping and the pandemic was right here at 4.6. And then inventory just completely took a nosedive. And it's been hovering on your months of supply, 1.5, 1.2, less than a month. And it's been climbing slowly. You're at 1.6 months of inventory, which still makes it a seller's market. Next, I'm going to switch over to my KCM, and we're going to go through some slides for the month of June. All right. So right now, the big conversation is about interest rates, right? That's what everyone's talking about. Of course, every time the interest rate goes up, we've talked about this before, every time it goes up 1 point, your buying power goes down 10%. We're going to talk about the interest rates and where they are today and where they're heading. So mortgage rates stayed relatively flat over the last month or so. So mortgage rates continue to inch downward this week, but are still significantly higher than last year, affecting affordability and purchase demand. Heading into the summer, the potential home buyer pool has shrunk. And the reason it shrunk is because we took a lot of those buyers, they wanted to capitalize on the 3, 3.5, 4, 4.5 interest rate, and they all purchased a home. In the meantime, a few months later, the interest rate has gone back up. So a lot of those buyers have been taken out of that buyer pool and capitalized when the rate was a little bit lower. Supply is on the rise, which we just talked about, and the housing market is becoming more of a normal housing market. This is welcome news following unprecedented market tightness over the last couple of years. So here we are today with a 30-year fixed mortgage at 5.0 or 5.1, a 15 at 4.32, and then a 5/1 ARM. So a 5-year 1 ARM is adjustable rate mortgage. Okay, so it's fixed for 5 years, and then it adjusts. So you might want to look into an adjustable mortgage if you're going to keep the house for, say, less than 7 or 8 years, which happens to be about the normal right now, or what people are keeping their homes. People used to keep their homes for a lot longer. At one time, it was about 10 years. Now it's about 8. So let's go into slide 4 here, which is the mortgage rate. So today we're at the 5.1, like I just mentioned. And then just a year ago here, this is just of this year, January of 22, right? 30-year fixed rate, January of 22 until today. So January, February, March, April, May, June. So it's just 6 months. The rate has gone from 3.1. You can see 3.11, 3.4, 3.69, 3.8, 4, 4.2, 5.1, 5.0, 5.2, 5.3, dropped a little, 5.0, 5.1. Here we are today at 5.09. Okay. So let's talk about slide 9 here. So are we in a housing market correction? I would, in my opinion, I would say yes. It's still a seller's market because inventory is so low, and the interest rates still are very good. I can show you some interest rates from just, not too long ago, where, back in, they were much higher back in the day. Like when I bought my first house, they were like 14 back in the 80s. So 5.5 is still a good rate. Just, watch it and lock in and, get your interest rate locked in so you don't have to pay any more. But they're probably going to stay somewhere around the 5 range, is what I'm getting for information for predictions on where the market's going to go. So 5% is not too bad, right? So slide 10 here, correction is a decline of 10% or greater in the price of a security, asset, or financial market. So what that means is anytime that there's a correction of decline of 10%, like last year, we saw double digits, 18 and 20%, homes going up at 18, 20, 22%. So if that went down, say to 10%, which were down half of last year, right here, you can see 8.9. These are home price forecasts for 2022. You've got the average is they're predicting the home prices are going to go up 9% on average. Fannie Mae is at 10.8, Freddie Mac 10.4, CoreLogic at 9.6, HPES at 9, NAR at 8.4, Zelman at 8.3, and MBA at 5.8. And then when you shake those all up and average them out, they're going to come out at 8.9%. So you buy a piece of property, it's going to pretty much go up 8.9% during 2022. Can you get that in the stock market? I don't think so. Can you get that in the bank? No. So real estate is still a great place to park your money and invest. It always has been, it always will be the best place to gain your wealth over long term. Okay. Let's go right into number 11. The housing market is at a turning point. We're starting to see signs of a new direction, but the ball is still in the seller's courts in most housing markets. So is it still a good time to sell my house, Scott? Absolutely. Absolutely. Okay. Has the market slowed down a little bit? I think so. But I also think it's July too. And a lot of people take a little bit of a break in July. They go on vacation. Weather's great. They're at the beach. They're not really thinking too much about housing. I see this in a lot of markets where, the warmer weather, when it comes around, people take advantage of it. And July predominantly has not been really a great month for sales in general, but real estate sales is the same. Maybe even the same with cars. Maybe cars are slowing down a little bit as well. But I always see July being a little bit of a slower market. It'll pick back up in August because people want to be in school for September for their kids, right? So let's talk about number 12 here. So this is a good slide to let everybody know how we come up with these numbers and this data. And a lot of it is off of showings, right? if there's more showings on a property, then you can say that the market has been busier versus if there's less showings, there's less people looking, right? Then you would say it's probably a little bit slower. So this is in thousands, and this is pre-pandemic right here, okay? And if we look at just say January, February, March, April, June, 127,000 showings through this Showtime lockbox that they have, so to speak, which lets you know when people are coming, when people are leaving, and any feedback that they leave for the agent, right? So 127,000 showings in June of 2020, just a couple of years ago. Then things started getting real crazy, and the showings started going up. Property was selling very briskly, and there was lots of people out there trying to take advantage of those low interest rates and buying. In June, so we got, let's see right here, this one here, March of 2021, that was about the highest at 284,000 showings. And that was in 2021, but look at here. Oopsie. This is April, 251,000. So it's still almost double the amount of showings per the pre-pandemic, right? So you got all these numbers here. Got January, 254,000, 270,000. If these numbers here were like this numbers over here, then I'd say, you know, business is back to normal showing wise, but they're still way up. There's still lots of people out there looking, right? So that's a great indicator right there to tell us how many doors are being opened, right? You gotta look, you gotta get in the house before you buy it, right? It's like a car, you take it for a test drive before you buy it normally. So all these people are out here looking. So those numbers are super, super high still, twice what they were pre-pandemic. These are existing home sales. So typically, you know, pre-pandemic, you know, 5.3 million. This is, you know, across the United States, 5.3 million again, 2019, 2020, 5.6, 21 was 6.1 million. And what they're predicting is 5.6 million for 2022, which is still a phenomenal amount of properties being sold. And that's what they're predicting, 5.6. Now, if they lower the interest rates a little bit, maybe we'll be somewhere in the middle. If they raise the interest rates, maybe we'll be under 5 million, who knows? But for now, they're predicting about 5.6 million properties being sold, which is right in line with, say, 2020. 2021 obviously was a phenomenal year in real estate and for buying and selling. So 2021, 6.1 million, that's a lot more. Another half a million buyers entered the pool in 2021 over the average of the 5.3 and 5.6. So 6.1 million was an amazing year in 2021. All right, let's take a look at number 14. These are average days on market. So for us locally here, our average days on market was 7. This is across the states. The national average was 17 days on market. And the average number of offers. So the average number of offers coming in right now around 5.5 offers per property on average. Now, some of them are getting 1, some of them are getting 12 still, 15. The average is 5.5. A few months ago, 3-4 months ago, that number was double that. It was 10 or 12. So the number of offers have come down, but the showings are still up, right? Based off the Showtime data. And then of course, inventory is low. So, and we want to get into number 16. So here's the magic ball, right? What's going to happen? What's ahead for the real estate market? I wish I had a crystal ball, but again, you know, I always try to make decisions like you guys on empirical data, which is data based on history, data that's in black and white, and data and trends that we can look at and make those decisions on where things are going instead of just reaching for pie in the sky numbers. So what's ahead is, in my opinion, interest rates are going to still stick around, probably around 5%. Inventory is going to climb up maybe a little bit more, but it's going to be a long time before we get back to 1,700, 1,800, 1,900 units, probably a couple of years. And buyer demand is still going to be strong out there because the American dream of owning a house is still the number one priority in everyone's thinking, and their work ethic is they want to own a house, stop paying rent, and collect on all those benefits of owning a property. So let's take a look at number 17. Mortgage rates are likely to plateau near current levels. Financial markets have attempted to price in the impact of Fed actions over this cycle, and they are likely also pricing in the economic slowdown that will result. Once we have passed this rate spike and associated volatility, MBA expects that potential home buyers may be more willing to re-enter the market. So what they're saying is, yeah, the rates have gone up, they're going to plateau off, and there's some buyers that are standing on the sidelines waiting for something to happen. And once they feel like those rates are, more stabilized, then they'll maybe say perhaps jump back into the market. Okay. And then we got total home sale forecasts. So we just talked about this. The 6.1 number. These guys are really kind of high on the total home forecast. 6.1 Fannie Mae, excuse me. NAR was at 6.3, MBA was at 6.7, and Freddie Mac is at 6.9. I just showed you the slide here a minute ago where they're predicting actually 5.6. So these numbers are a little bit high, which is great. And we'll see if we can hit those numbers. That would be a good goal, right? And then number 19, experts don't believe the market is in a bubble or a crash is in the cards, like during the Great Recession. The nation is still suffering from a housing shortage, which we talked about, right? And that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. That's likely to keep prices high. So the millennials have a lot to do with this real estate market and wanting to buy a piece of property and stop paying rent. Okay. And then number 20, the National Bureau of Economic Research defines a recession as, what is a recession? A recession is a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real gross domestic product, real income, employment, industrial production, and wholesale retail sales. Okay, so you want to know what the real meaning of a recession is, there you have it. So that wraps it up today for the latest state of the market for the month of June. We want to thank you so much for joining in for another episode. If you guys like what we do, make sure that you hit us up on Facebook and YouTube. Check out our videos that we have up on our website, ScottZainoGroup.com. There's all kinds of information on our website, whether you're a buyer or a seller. There's mortgage calculators on there. There's blogs, there's videos, lots of education and informational videos that we love doing for you guys. But at the end of the day, here's the thing. We want our buyers and our sellers to make the best decisions. And in order to make those best decisions, you need information, right? So that's why we do these state of the markets for you guys. So we hope that you all appreciate it and get some value out of it. If you have any questions at all, you guys always know that our door is always open. You can give me a call at 508-566-0051. That's 508-566-0051, or shoot us an email at scottzainogroup.com. All right. Thank you so much for watching, and we'll catch you on the next episode of State of the Market 2022 for July next month. All right. Thank you. Have a good day. Talk to you soon. Bye-bye. God bless.